We have a short October month. The month ends tomorrow, and we kick off November with a busy week. Let's chat all about it. First things first, we know there's risk in trading. Please always use trade capital only. You know the deal there. Social media, make sure it's really me. This is the best place to find me, youtube.com/Chris Pulver, my Discord channel, and verified Twitter account at Chris Pulver. All right, let's jump into the charts. I shared this in the thread this morning. We have over 1,000 companies reported earnings this week, some notables, some ones we might take a look at in equities on demand. We might look at some Pfizer, possibly JetBlue's been beat down enough. I'm only looking to see if we get a bullish push out of that. Anheuser-Busch might be a decent play, even though it's lower beta. Possibly Airbnb. Airbnb usually has some decent volatility. PayPal and Square, or Block rather. So that's aftermarket on Wednesday for PayPal. Block is SQ aftermarket on Thursday, similar to what Amazon did last week. Also Apple. And anyway, 1,000 plus companies. Plus we have FOMC on Wednesday. I'll have 2 sessions that I'm running, or I'm a part of one. So with A1 Trading, Nick Sayek and team, I'll be at 2 p.m. Eastern time joining their channel. And then I'm running on my own channel here, youtube.com/Chris Pulver at 2:30 p.m. Eastern time. And we will digest everything FOMC, what Powell's saying during the press conference. We'll see what price action we have from 2:30 to 4 o'clock closing bell. And then Friday we have non-farm payroll plus CAD employment. Take a look at high impact news. Everything coming out this morning. We had attended, this is going to be tonight. So Tuesday's trading day, we have the policy statement from the BOJ, again expected to stay the same at negative 0.1%. We have U.S. news all week. To wrap up the month, we have Kiwi employment news kicking off. It's going to be Wednesday's trading day. We have a European holiday that is All Saints Day. Okay. ADP numbers, ISM, PMI, JOLTS job openings, funds rate 5.5%, which is expected to be the same. That's that window 5.25, 5.5 for the U.S. Powell Press Conference at 2:30. Then we have the Bank of England with some expected changes in the monetary policy voting. Still expected to be a pause at 5.25%. Unemployment claims for the U.S. on Thursday morning, and then 8:30 non-farm payroll with U.S. and CAD. So, like I said, going to be a busy week. We wrap up the month of October, kick off November, FOMC plus non-farm payroll, 1,000 companies reporting earnings. At the very least, expect volatility. We may not see a ton of direction. We might see, obviously, some big highs, big lows, and a lot of spikes and a lot of noise, which we can certainly position for that and trade that. So that's pretty much what I'm looking to do for this week. Currency strength-wise, this morning, I saw the futures was up for everything. 0.7 on the Dow futures, 0.66 on the S&P futures, 0.64 on the NASDAQ futures. Gold is up over 2,000. We never really pulled back to that 1970 zone like I was looking for. Silver also up. Oil flat-ish. U.S. market open. We opened a little bit higher from the push yesterday, or push last week. We did fulfill the head and shoulders pattern, high to low, lower high to lower low. So it's right here. I'll draw this out. So we had our high to low. This was the neckline. So left shoulder, head to neckline, right shoulder. Once we broke, retested, and pushed. That was the symmetry last week. I called for lows around 411, and we had lows, I think, right at 409 and change. It was, I mean, accurate, to say the least. Low of the week was 409.21. And we looked at, 410 to 411. 400 to 410 is a really important level of support if there's any more downward pressure. I could see a bunch of noise this week where we have a big spike to the downside, but we're going to see if those bulls wanted to come in and defend any type of major level. It would be over in this region. So past resistance becoming support. Lots of noise over here, somewhere between that 410 and 400 zone. And if there's enough of a rip to the upside to get back, to reclaim something pseudo bullish, the bulls would have to reclaim 420. We still have a channel resistance level. If there is a holiday rally, we get above 430, and then we possibly make runs back up towards these highs in July at 450, 460. That would be an incredible rip to the upside. I don't know if that's going to happen. And I also don't know if the market's going to break below 400 either. So, like I said, just be prepared for a lot of noise, a lot of volatility, and we're looking to take advantage of that in any way that we can. Alrighty, let me take a look at a couple things. I'll log into the YouTube channel, say good morning to everybody, and see how we're doing, getting ready to trade this week. Let's get after it. FK, good morning. Gary, good morning. Dennis, good morning. Jan, good morning. Dara, just Angela, Andrew, good morning. Nice to see everybody. Happy Monday. All right, expecting a lot of volatility this week. Good morning, Larry. How are you? Let's see. SPY, QQQ, 348 on the Qs. Also, 10 plus % corrections on both the SPY and the Qs. The Qs hit the 200 EMA last week on the daily time frame. That was a pretty notable correction, and I am wondering if there's, again, is that it, or do we have a deeper pullback? Looking at this overall swing from low to high, the Qs have pulled back to 30%. There is a Gann retracement methodology that 30% is a pretty good pullback zone to retest the highs. Again, if we do not hit the 38%, 30% could hold. We head back up towards the highs. If the Qs get lifted, SPY goes with it. If everything is dropping further, it would make some sense on the technical side that we find the 382. If we find the 382 and pull back deeper, past resistance over here, previous breakout points between that 382 and 50. Let me see what that correction level is from a percentage standpoint at the top. So if we go from this high to the 382, that's a 12.76% correction. If we go to the 50 pullback, that's 16.5% correction. I don't know. Powell could certainly say something the market doesn't want to hear, which I don't know if it's going to be any different than what he's been saying for a long time. So, question just came in on my Discord. You trading non-farm payroll? I usually trade. I don't like to trade Forex necessarily. I like to watch and see what it does. A lot of times I look to fade non-farm payroll if it's a big inefficiency, and then look to see what it does for the futures market for some pre-market movement, and then we'll get into equities at 9:30. So any news that comes out in the U.S. at 8:30 that affects it, I just look to see what the futures market does. Does it say risk on, risk off during that 8:30 to 9:30 a.m. hour, and then we'll see what opening bell gives us. We do the same thing for CPI, the unemployment claims on Thursday. Sometimes the GDP numbers are at 8:30 a.m. Eastern time as well, so just keep an eye on the pre-market stuff. Okay. All right, so we have SPY, we have Qs, oil hanging out at 84. Listen to a lot of interesting content this weekend, some podcasts that I follow. One thing, when we had the Russia and Ukraine conflict, oil prices plus higher inflation, everything was just kind of reaching its apex, priced out here to like 125, 130 a barrel. Recently, Israel, Palestine, Hamas, Iran, everybody's involved in the Middle East right now, and oil prices have been pretty quiet since that run to 95. I don't know. Is this a pullback in accumulation zone to then rip again and go higher? It's possible, with this structure finally breaking. But $80 has to hold pretty well. 75 is kind of my line in the sand. If there's any bullishness, I don't think the bulls can let price fall below 75. So if oil's going to rip, I would say that we're seeing price action supported by $75, $80. If we come back into this area, let's say 75 to 65, I think this is more recession pricing, just like we had over here. So, I've said this for a while. If we have a high of the year, low of the year, the market tries to find some type of supply and demand range because we've had crazy volatility and trends, and then the market just settles in. And I would expect price to possibly stabilize. If you look at the dollar index as well, dollar index, if we finally get below 105.50, there we go. We're at 106.29. This would be a good week to see the dollar show some confirmation. If the dollar index gets and closes and stays below 105.50, I think that gives the market a reason to run higher. Stock market runs higher. Currencies perform better against the U.S. dollar. Oil could lift, but I would say gold and silver continue to run. Bitcoin probably makes a good run as well. Once we had this big turnaround on gold, 1997. This price action on gold's been pretty crazy. I was looking to see if we had a pullback towards 1970 off of it's a daily time frame. We never had it. So there's a lot of resistance ahead. The charts are loading kind of slow. There's a lot of resistance ahead here with those multi-year highs around 2070. I could see a little bit more follow through on gold this week, but I don't know. I'm personally, I like silver better as far as positioning and outlook. I'm not saying that gold can't break the highs, but I would not like to follow that move as much as I would just to stay bullish on silver. And also with Bitcoin breaking the 31, 32K highs, looking to stay long on Bitcoin and Bitcoin, Ethereum. I know Solana, some other kind of network related coins could also be doing pretty well. But we're going to find out. So if gold heads up here, I would be very profit centric, meaning if you were long in any way on gold, I would be looking to protect profit or even move it into stops now. Where if you got long, we had called this buy position back to this previous level, and it just blew right through that. So I mean, profits could have been taken here, or just moving stop losses and just continue to trap some profits. But if we hit 2070, I'm not saying I'm looking to fade that without confirmation, but I would say that likely looks like we're going to hit some major resistance on gold. Again, watch the dollar, right? The dollar breaks below 105.50. This does give open space to the downside. Even if we get back to the midpoint of this broadening pattern or we fall all the way down, that's a lot of room for the dollar to drop, a lot of room for currencies to rally, a lot of room for everything that basically correlates with the dollar to show some signs of life. That includes the stock market, obviously. All right, let's go Bitcoin. Bitcoin trading at 34. We've had a bit of a pause, but this is the break I was talking about. Daily and weekly candle closing through 32K. That's a big spot. So there's room technically up to 37. There's room to 48. I'm not keeping this channel. I don't expect this to be much resistance. If it is an efficient move, that'd be kind of the first time in a while, because what starts out looks like a channel can eventually just break and go almost parabolic. So if we continue to push higher, I would still be eyeing this 48,000 high, and obviously I would be eyeing all-time highs and just trying to buy dips. If we have dips, and we have flags, and we have trendline breaks. So if we have a pullback this week towards 32, but we can hold that level, I would be looking to get long and stay long. So that's it. And how exciting this gets in the next 6 to 12 months, nobody knows. But if we're talking about this, if we're having this conversation in the middle of next year and we're talking at Bitcoin at 100,000, anybody that's been in at 17 or in at 20 or holding since however long ago, you're certainly pretty excited about that. So we'll find out. Okay, insurance rate hike crisis in Florida. Yeah, well, I know. Is it mainly homeowners? I mean, that's why everybody hates insurance. It's like you need it when you have to have it, but it is a bit scammy. So people are, I don't know. And obviously, if you're living in an area that can have hurricanes and have floods and have environmental damage, I mean, and that's pretty much everywhere. But who knows, man? It's just, I don't know. It's consumers are getting stuck with the bill, and but at the same time, you know, we're dumb enough to pay it. I mean, consumers have been paying higher prices on everything, right? And if we're dumb enough to pay it, guess what? It's not going to change. They'll keep passing down to us. So the consumer ultimately has a lot of power. We just don't realize it because it's the herd mentality. And so it's like, oh, well, this is what I need and this stuff I buy. Just stop buying it if you can. I mean, insurance, yeah, obviously you need it, but I don't know, shop around, do something, move. I don't know. I mean, if things get unaffordable, I mean, I'm in the same situation where it's like I'm out here in Utah with 2 costs of living and it's stupid. So I'm looking to just scale back all the big fixed expenses, transportation, housing, and food. You somehow save money on those 3 things. It's amazing how those fixed expenses go down a lot. So, if it's time to buckle down, then time to buckle down. Yep. Yeah, David, my rental property. Yeah, that's crazy, right? I know. Look at that. So we got Florida, we got Michigan. Yeah, it's all bad. It really is. So I don't know. I mean, we're in a really ridiculous time. I don't know what this is going to mean as far as longer term outlooks. It certainly seems to think, or certainly makes people think that things are going to be terrible moving forward. Again, listen to a lot of content this weekend, read a bunch of stuff this weekend, and let's just talk this for a second, okay? Where are we at right now? We're in Q4. Okay. Fed message. Fed message, and we'll put other central banks as well, plus central banks, right? Right now, their message is pause, higher for longer, right? Consumer is squeezed and stretched, meaning times are tough. We're borrowing more than we can afford. We're struggling to pay back things. There's auto loan problems. There's student loan problems. There's people that are possibly going to default on mortgages. There's commercial, interest-only loans that are going to be defaulting in the next 1 to 3 years. There's going to be a wave of bankruptcies and a wave of defaults. All this stuff is coming. Okay. Does that mean that the markets are going to reflect all this? 2022 already did. I mean, right now the Fed's message is, okay, so let's say they say the same thing they've been talking about for the last 12 months. Inflation's a problem. We want to get sub 2%. We need to see a softer labor market, blah, 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 blah. Same thing. The market has digested that message in a big way. Outside of, the continued disappointment of like, oh man, Powell's bringing the hawkishness again. Okay, so he drives the market lower. But you have to remember the market is not the real economy. If it was, then 2020 would not have looked the way that it did. Right? 2020 was a global recession instantaneously that was stimulated out of, right? The whole world bought their way out of a crisis and a recession within like 3 months. The market does not reflect that economy because there's still lingering effects of closed businesses, people losing their jobs, now getting back into the workforce 3 years later. But higher for longer has been this annoying, pestering narrative that the Fed is stuck with. And all the other central banks that have been raising rates along with the Fed have now been pausing. So here we are, November 1st, earlier than usual, but the Fed has a rate decision this Wednesday to kick off the month, and we have non-farm payroll. Guess what? Message from Powell is probably going to be the same. Watch price action. Okay, this time seasonality-wise, November, December are historically bullish. Q4 is historically bullish. Okay, so if there's time for the markets to rally, and I'm just saying this is why we watch price. If there's a time, historically bullish, right? A lot of traders will call this the holiday rally or the Santa rally. We could watch price action. I still think, like we talked about the last several weeks, as DXY and SPX, watching those two instruments. The dollar index below 105.50 gives a lot of room for things to run against the dollar, right? The dollar's had essentially a 3 to 5 year boom. And certainly the last, 3, 4, 5 months with having 11, 12 weeks in a row, we've had a great run on the dollar since the DXY hit 100. If we start to fade that move back down, again, just think about those correlations where things that need dollar weakness to rally, it happens. So DXY is a big instrument that I'm watching for currencies and for equities. On top of that, everyone wants a recession. Everyone expects there to be a recession. Everyone's talking about a recession. When everyone's talking about it, it doesn't really happen, right? Everyone was talking a couple weeks ago about Black Monday and all these correlations and parallels to 1987. Did it happen? Did we have a 27, 37% crash on a Monday? No, right? So this is what I'm saying. You just trade what's in front of you, okay? So we've had kind of a, we've had a recession. And we're kind of in one, and we're just not acknowledging that it is one because by definition, jobs are still being created, unemployment rate's still historically low. Therefore, from the macro perspective, it's not considered a recession. But companies are laying off workers, right? There's slowdowns in tech, interest rates and borrowing is excessively high, and every company that needs debt to grow doesn't have it anymore because the rates are too high. So we are in a recession. We're just not calling it that, right? What people expect to see is like a, full, whole recession where everything goes down. And what it's really turned into, it's more of a rolling sector wide or sector rotating recession, right? Because 2022 started with tech and then it sprinkled into retail, and now it's kind of everything that has consumer driven sales because the consumer is getting pinched, right? Airlines have been down recently, cruise lines have been coming back, retail's been beat down pretty badly. Okay, so if the consumer survives, then those will be okay and show some resiliency. I mean, Ford and GM, what have they done since the auto workers strike and bargaining agreements? I mean, those have come down a ton. GM hasn't returned anything stock share wise or stock price wise in over 11 years after a pullback. Ford hit fresh lows last week below $10 for the first time in 3 years. Okay. So anyway, I'm talking about this stuff because look, it's a ton of noise, right? There's a ton of noise and everybody's worried and things are going to get terrible, but all this means nothing unless it's supported by price. That is my point. And we're going into 2024, which is a US election year. Okay, is it all about the US? No. You have an entire world non-US growth, right? Maybe that's led by China. Okay? Maybe we have a China-Taiwan conflict next year. Who knows, right? We have Russia, Ukraine. We now have the Middle East. We could have China, Taiwan. Just throw it in the fire. This whole dumpster fire of the global economy. But 2024 in the US, gridlock is probably a good thing. It's going to be a circus. I can't believe that we're possibly, revisiting 2020 all over again. But if there is any opportunity out there, I will do my best to exploit it, whatever it is. Maybe it's the dollar drops. Maybe it's Bitcoin. Maybe it's gold. Maybe it's stocks. Maybe it's non-US stocks. So do I have some exposure there? Yes. Do I have some Bitcoin exposure? Yes. Do I have currency abilities to trade, bull and bear markets? Yes. So it's just, I think it's a good time to be considering some other assets. Have some money in other there's other places where there's places to make money. So if my stock account is sideways, can I make money in crypto? Can I make money in Forex? If my account is up, right? Because obviously the downside, I'm protecting my downside on equities. So even if I go with it, I can lower my cost basis. That's fine, but I'm accumulating. Crypto is an opportunity for profit, and honestly, I'm taking discretionary income, and if we get a pullback, I'm adding. If we get another pullback, I'm adding. I'd like to say if we get a pullback to 32 or 31, I'll throw in some more. If we get a break I'm probably, for right now, my last spot to add is I'm going to be as aggressive as I can from now until 50K. If we get through 50K, I'm pretty much done in my position, and I'll let that run. If we get up to 100, 125, awesome. I don't know how parabolic it can get. But, I'm still building a base position from 3,000 back in 2016, 2017, and 2019. So again, you could argue like, well, you need to be, 50% invested. I'm more like 10 to 15%, exposure on Bitcoin. But the asymmetry on it's pretty amazing, which is why I like it. So I'm not a maximalist, but I appreciate the asymmetry to the trade. That's it. Okay. How about Forex business? Can you stop like trolling a little bit? You're being a little aggressive on those comments. Rolling recession, all that means is every sector's feeling it. It's just not at the same time, right? Everyone sees recession and they're like, well, the whole world's in a recession or the whole economy's in recession. It doesn't work like that. Rotation is faster, right? Things are happening faster, booms and busts happening faster. So it's being felt at different times. And it's like, this quarter could be technology, this quarter could be retail, this quarter could be staples and travel, whatever. It's not all felt at the same time. But the way that price played out in 2022, the bond market's in a 3-year drawdown, which is the first time in 300 years. It's like since 1780, we're in a 3-year drawdown. Modern market since 1928. So you look at things, it's like this has never happened before. There's a lot of that. There's a lot of things that haven't happened. There's a lot of things that we're trying to grasp at history and see how it rhymes, and it's not going to repeat itself. But that being said, I said this in Discord last week, like there are tools that these central banks have and possess that their main objective is price stability. And I know that something's going to probably break before there's a reactive policy change. It wouldn't surprise me in 2024 with the way that it's getting. It's no secret that continuing to service debt and higher levels of debt is going to be one of our biggest budget items for the U.S. So what does that mean? Well, the Fed can probably just cut rates a little bit. And why would they do that? Because if they want to preserve price stability and see the market stabilize and see the market possibly rally, a dovish Fed, some rate cuts, maybe 50 basis points, maybe 100 plus basis points. If that's spaced out, that's going to give the markets some breathing room, right? So there's all sorts of mechanisms in here that this is why all this, you just watch price. You know, I mean, look, I would be crazy to think like, here's where we're going to be in 2024. Nobody knows that. Here's where we're going to be in 2030. Nobody knows that. What I'm doing right now is trading in front of myself. This is what I see. This is how I can position up, down, sideways. Can I make money? So I am going to grind in the trenches as I do, because I think you're crazy if you're trying to call this, big prediction, position for it, and then you're wrong. Because I can't tell you how many people I knew were shorting, fading. COVID's the real deal. The whole world's going to end. This is fake, funny money, blah, blah, blah. And where are we at? We're still higher. Now, eventually, they got proven right. And they're like, see, we told you. Right. After a double, right? A more than double. It's like you can't position like that. So you can't take one side of the argument and say it's going to be a bear market. I mean, if you want to say that, fine. But what happens when it goes up 20%? If you are still playing that fiddle of bear market, you're an idiot, right? And I'm also not a perma bull because obviously there's reality checks. So all I'm saying is this is my window right here. That's what I'm focused on. That's what I'm watching. If price does this, I'm going to trade it. Price does this, I'm going to trade it. Price goes nowhere, I'm going to trade it. I don't know what this market's going to look like. Maybe it's this, right? We're getting all excited about like, oh, that's going to happen or that's going to happen. Maybe none of it happens. Maybe this is all that happens. How do you trade that? There's ways to do it, So you got to trade. You got to trade what's right in front of you. I think to me, that's my best path forward. And if that doesn't suit your eye or you don't like that style, then maybe this is the wrong place for you. But anyway, that's my rant for the day. Okay, it's 9:58. What do we have? We're at 414. Let me check the day. So we're up a little bit on the morning with futures lifting higher. I still think it's going to be a pretty noisy week. Now, granted, we closed last week around 410. I think that was the actual market close. Close around 410.68 as of closing bell Friday. I'm looking at. I don't love the fact there's a little bit of a gap there, but I do expect there to be reasonable volatility for this week, next week. Combination of Fed, combination of a ton of earnings, combination of non-farm on Friday. I would look at all of a $11 to $12 candle on the day. I'm going to see how I can price it out with class this morning for equities on demand. If we do a strangle of some sort and price is up or price is down, position for that. Part of me is, and I think the reason we have to consider both is if it's priced accordingly, where we have like a big spike down to 400, but it's a spike, and then next week and the weeks after it starts to rally. Technically speaking, that would make sense, where the message from Powell could be the same, but the market starts to buy that off of a correction level, off of a Q4 holiday rally, right? Possibly. So if you think about even, I mean, things were way worse in 2022, were they not? Like sentiment-wise, things were way worse in 2022, and what happened right here? In October, we put in a bottom that hasn't been returned to. So I mean, there's a lot of participation where I could see some decent movement to the upside from here. Now, back to the highs, I don't know. But at least getting a run back to channel highs around 430 to 435. So again, I think if the bulls can defend 400, that's a good spot to watch. Okay. All right, it's 10 o'clock. I'm going to wrap up for the session this morning. Currency-wise, again, we're going to have non-farm on Wednesday. Or I'm sorry, FOMC on Wednesday, non-farm on Friday. I'll check my portfolio builder, see how things are going. It's been nice the last couple of days. We've seen a weaker Swiss. So Friday's trading and today, that should put me in a better position for. I'm going to check before we go. I'm going to check my portfolio builder. Let me also post my message for Discord right here. All right, so Discord channel. There's a link if you want to join. And we'll kill it this week in the trading rooms. That is the plan. All right, so I'm just going to do a quick spot check, and then I'll switch over to equities on demand in just a few minutes. So if you're ready to switch over in the trading room, stand by. I'll be there in a couple minutes. Drawdowns improved a ton. Now the drawdown went from, I was down to like $9,400. Now it's at $97,600. I've got some positive pips right now. Let me see net position wise and profit. So I'm showing 44 pips plus 7 plus 5 minus 50 minus 71 plus 69 minus 101. 96 pip drawdown. So we've come a long ways. Here's my Telegram message for Portfolio Builder. I've done a bunch of spot checks. So the drawdown is improving, which is good. We have some positive swap, which is also good. Last week on Friday, the spot check was down 161. Now it's down 96. So I'll just do this right here. Portfolio Builder. Spot check. Minus 96. Drawdown continues to improve. We'll go balance. So my balance is 10,039.55. And the floating P&L is 9,761.88. Trade size wise, let me just double check the entries. I've had most of these memorized. 5,800, 69 or 65.97, 95.22. Pretty sure they're all the same. Yep. So, and this isn't a bad thing. We're going to assess that. I'll do a video update. I'll do a video update or two this week for Portfolio Builders. No new fills yet. I will review all pending orders and look to make necessary adjustments. Okay, so that's a little update there. This week I'm going to also post another video to my Traders Path to 100% video series. I'll try to get another look at all my accounts, how things are going, you know, short term, medium term, long term, different currency pairs, different assets. And then I'll start getting back into the indicators A to Z. Just a lot of stuff going on in the background, but all good. Okay. Yeah, Flex Trading Room. Yeah, Flex Trading Room Tuesday, Wednesday, Thursday. Yep, still have a trading room for Forex specifically. We've been doing pretty well in that. So doing pretty well in stocks and options as well. Okay, all right, I'll let you go. Equities on demand students, I'll switch over to the trading room. I'll see you in a few minutes. Thanks for being with me today, everybody. And I'll be back to wrap up the week on Friday. Like I said, I do have 2 bonus sessions this week. I'm doing a 2:30 p.m. Eastern Time FOMC session. That'll be here. YouTube.com/Chris Pulver. And then on Friday, I'm going to change my Friday session. We'll do an 8:30 a.m. Eastern Time. We'll do a non-farm bonus session. Okay, so this will both be on YouTube. So I'll just run it through this channel. Okay, so 2:30 for the press conference for Jerome Powell, and then Friday we'll do non-farm and see where futures go, and then we'll get ready for opening bell. All right, sounds good. All right, everybody, have a good week. I'll see you in the trading rooms, and I'll see you on Wednesday, Friday for the bonus sessions. See you soon. Thanks, bye.